Welcome back everyone to another video. My name is Lia.
And I'm AK.
And if you're new here, then we make videos all about property investing, business and working together as a couple.
In one of our latest videos, how to use bridging finance to buy an investment property, we got a lot of comments on that video. So we have decided to do another video with the most asked questions about bridging finance.
But before we go into the most asked questions, if you haven't already, please check out our website linked below, propertycouple.co.uk, where you can sign up to our newsletter for more advice and tips on property investing. So let's get into it.
So if you are not already familiar, let's start with what you might use bridging finance for. It could be that you're maybe purchasing a new home before selling your current property.
It could be that you've just acquired a property through auction, and worth noting that the period between exchange at the auction and completion is usually 28 days. It's always worth checking. So bridging finance can help you get that money fast.
Or maybe you're financing a renovation on a property like you've seen us do quite a few times now.
Or perhaps you're undertaking a land or development project, something bigger. Bridging loans are both regulated and unregulated. And when I first heard the term unregulated to describe a bridging loan that we were entering into, I did panic a little bit. But don't worry, we're going to explain the difference between a regulated and unregulated bridging loan. So a bridging loan is regulated if the security property is going to be occupied by the borrower. So for example, if you're buying it and you're planning on living in it, then that kind of bridging loan is for a homeowner. It's backed by the FCA, Financial Conduct Authority, and it can be used to perhaps help you if you're buying your next property before your last property has sold, so bridge that gap.
Bridging loans that are not regulated are loans where the borrower will not occupy the security property, and it is used for business purposes, so investment properties, for example. Now, these are definitely more common types of bridging loans and are used by people like us as property investors to acquire land, properties and fund works.
So in this video, we're going to be focusing on unregulated bridging loans. And the word unregulated in relation to bridging finance is nothing to be worried about. It simply means that the property is used as security for the loan for business purposes, and therefore it doesn't require the FCA's protection because a consumer is not personally involved.
Now remember, your due diligence is always needed. Make sure you completely understand the charges and the terms and conditions before you go through with anything.
So one of the most asked questions is, how long will it take to get the funds?
And one of the best things about bridging loans are that they are super quick to arrange, sometimes within days.
Possibly the fastest method for getting finance would be through Lendlord's bridging finance tool. For those of you that are not already familiar, Lendlord is an all-in-one platform that makes property investing easy. And there are so many features to use on the platform, but today we're going to focus on their digital lending for financing your property projects.
Using Lendlord, you can find out if you are eligible for a bridging loan and if successful, have funds land in your account in as little as 5 days.
So the way it works is this. So the first thing you would do would be to fill in a short questionnaire and review the heads of terms. Then you'd have to upload all your relevant documents. The next step would be allowing for legal processing, and the final step would be receiving your funds.
Cha-ching. Sorry.
Cha-ching.
So check out the link in our description box to join Lendlord for free and get a 40% discount on a premium upgrade when using our referral link.
Thank you to Lendlord for sponsoring that part of the video. Now the next most popular question is bridging finance available to me if I do not have any income? This is a great question.
It is, and the answer is no. Next chapter. No, I'm joking.
Well, the answer is yes, bridging finance can be available to you.
Although most lenders require some income proof, a bridging loan is normally arranged with all fees and monthly interest payments added. So no monthly payments to make.
So this aspect normally removes the need for you to prove that the loan is affordable by your income, what you're getting monthly. But obviously every lender is different. In our experience, it is usually based on the deal itself rather than your personal situation of being able to make the monthly payments.
Another popular question is, how do I repay a bridging loan?
Bridging loans are always arranged with the first question being, how will the loan be repaid? So brokers and lenders will put a huge amount of emphasis on this point. And if the exit strategy does not sound feasible or make sense, then usually the lender will not allow the loan to go through.
Acceptable exit methods are more often than not sale of property or refinance.
So if the sale is the stated exit route, then the lender would expect agreement that the property to be sold would either be on the market prior to the commencement of the loan or on the market within a specified time frame, such as following the completion of all the renovation works, for example.
If the exit route is listed as refinance, then lenders will do much more due diligence beforehand to ensure that this is a possibility, i.e. the lender will perform checks to ensure that the client's credit is likely to be good enough to achieve a refinance at the end of the term and that the income is sufficient to raise enough funds via a refinance to repay the bridging loan, plus any accrued fees or charges.
So even with very careful underwriting, it is inevitable that some loans will overrun the term agreed, as not everything in property goes to plan, as we've seen firsthand. Lenders will normally contact the borrower around 3 months before the end of the term, and they'll just ask you, how's it going? Are you on track to pay us back? How's your exit strategy coming along?
Yeah, and actually the project previous to the last one we've just done, that was the case because we were overrunning. We had some problems in terms of our builder's health and things like that, and things were running well over the project timeline, and we were in constant contact with them in terms of the delays and that sort of thing. So yeah, it definitely happens.
Next big question is, what happens if I don't pay back the loan on time?
Now, if the lender believes that the exit is looking unlikely, then they will normally make recommendations. You know, one of these recommendations, for example, if you were selling the property, if you were doing a flip strategy, would potentially be to maybe drop the sale price.
Mm-hmm. So long as the sale price could cover everything that they're owed
Exactly.
back. But the lenders clearly want the loan repaid as per the offer. But normally, you know, they'll work with you, the borrower, if it has overrun, provided that you're keeping in regular contact with them, like AK said in our previous example when that did happen to us.
Yeah, and it does feel uncomfortable, and you kind of feel like you're being put on the spot slightly, but it's so important to work with them because they want to work with you. They you know, they don't want things to go down the route where, you know, it becomes very difficult and, you know, you have to go through court proceedings or, you know, move onto something like that, for example. So it's really important to just be as transparent as possible and communicate as much as you can.
Exactly. They just want to work on an action plan. And on that note, we would always suggest taking out a bridging loan for the longest term available. I think the longest ones I've seen are 18 months. Everything we've done so far has been 12, obviously. We have run over, and this is what happens. You have a time frame and often things overrun. So I'd always say, and this is not financial advice, but this is just speaking from experience, we like to take things out for the longest period possible now.
So let's talk about interest.
Now, this isn't a question per se, but I did want to include it. It's to do with bridging lenders charging interest in 3 different ways.
So the first way is monthly. You can make monthly repayments while the overall amount of the loan stays the same.
Second way is deferred interest, where the interest is not paid off monthly. Instead, it is added to the final amount, which is paid off at the very end of the loan.
Like a tab.
Yeah.
Stick it on the tab. And the third is retained interest. So this is the total interest that is calculated at an agreed rate at the start with the lender.
So it is then added to the total bridging finance figure. In our last bridging video, we spoke about the interest getting deducted up front. And we also wanted to mention, you know, these alternate options, since we got this lovely comment from one of our viewers. So Andy said, thanks again for the content. Probably worth mentioning to the audience that the interest on a bridge does not have to be retained by the lender. Could also be rolled or capitalised, where it's then added to the loan and paid off at the end, or serviced, where it's paid off every month. He said he's used both options. So we just wanted to cover all of those here, even though we've only ever experienced it as retained interest.
Cool. Thanks for sharing that as well, Andy. The next question is, what is the average cost of a bridging loan?
Well, here's a recent example with Lendlord on their website showing approximate fees on a 150k bridging loan. So you've got £3,000 here in arrangement fees, a valuation fee of £220, legal fees TBD to be decided, but we usually budget around 1,500 or 1,200 plus VAT for legals.
Tubed.
And then it says
Sorry.
TBD.
It's so funny because imagine if you're like legal fees tubed. Sorry. And
then then we've got an admin fee here of £495. So, you know, in our last video, we did share all of the fees that we've been paying on different bridging products. So if you haven't already, you can click on that video in the cards to watch the breakdown of costs.
It's also worth mentioning that nobody said that this was cheap, but it certainly is fast, and usually that is what you are paying for. You're paying for speed with this type of finance.
That's absolutely right. This isn't cheap, but it's fast, and usually speed is what you need, especially when it comes to things like auction finance.
Yeah, it's a tool. If you know how to use it, it can be super effective.
So we hope you enjoyed this video. Don't forget to like and subscribe. We'll see you in our next upload.
See you in the next one.
Bye.
Bye.